Hi, and welcome to this week's Money Talks. I'm joined by expert financial columnist Edmund Ching. Hi Ed, thank you for joining us.
No problem, Bauke.
And today we're going to talk about healthcare tech, starting to talk about Fitbit. Obviously had a hugely successful IPO last year in June and a good Christmas trading period. What does this success of the Fitbit mean for sort of related products such as the Apple apps?
Well, I think, Bauke, clearly it is part of the Apple ecosystem because it does fit well with the iPhone. So that's a very important point because obviously the iPhone is a huge ecosystem in itself. I think what it points to as well is that millennials, people like yourself, of your age, think very much about health. And I think feel that wealth is not just about money, but it's also about having good health. And from that point of view, Fitbit fits perfectly because it is, of course, tech, but at the same time fits perfectly with this long-term goal of being healthier. So from that point of view, I think it's a big boost, but I think we're early in this healthcare technology trend still.
So if we are early there, Fitbit is obviously the one sort of the go-to item now. Do you think its competitors are going to take over, or do you think the product has like a sort of a market-leading position for a while?
I think for a short while it has a market-leading position, but I think the problem with technology is it moves so quickly, Bauke. So today's hot product can be gone tomorrow. Who remembers Nokia today? Remember, Nokia had a global market share in mobile phones of over 40% at one point, and now it's absolutely nowhere. So things can change very quickly. And for me, if you think about healthcare technology, the really big story will be monitoring of heart rate, monitoring of blood pressure, monitoring, for instance, of sweat and of basically to give you early warnings of problems with your health to make you go and see the doctor or to make you go and see the specialist. We're not there yet, but I think that is where we're going to go, and we haven't seen the killer app there yet.
Why do you think those drug companies, those healthcare companies are such long-term investments?
Well, this is the thing. We're all living longer, number one, and we all want to live longer healthily, number two. So interestingly, when you look at the data, what is quite clear is no matter what the economic growth of a country, typically the healthcare spending of the country grows faster. And that's just as true in the UK or in Europe as anywhere else. So it's a long-term growth story from various angles. And of course, we're all getting older. So we throw all those things into the pot. It is quite clear that healthcare is vitally important. New development of drugs is vitally important. And when you look at those companies, they make a lot of money. Their profit margins are very high. They generate lots and lots of cash, because we need those drugs and because they have patent protection. And that's why when you look at the healthcare sector in the US or Europe over the long term, they have outperformed the general stock markets by miles over the last 5 years.
And to what extent do you think these developments and therefore the profit that comes with it comes from the private sector rather than the public healthcare?
Yes, it's a lot about the private sector, because if you look at quoted healthcare companies and drug companies worldwide, they make the bulk of their money in the US. And in the US, the healthcare system is largely a private insurance healthcare system. So it's funded by people and companies, not by the governments as it is in Europe. So that is where the money really is, and that is where the money will continue to be. One interesting fact about the US, even though they spend much more on healthcare than every other country in the world pretty much, their results are not very good. They don't live as long as we do in Europe, for instance. Now, how is that? They spend more money and yet they live less well. Well, obviously, diet, exercise are big parts of that solution. But let's be frank, they're not going to change overnight. So drugs are not going to become less important. They're more important. And so that's why I like to buy drug companies in either the US or Europe.
And if we talk about healthcare companies in the US, we have to talk about Pfizer. What do you think? They obviously had this deal with Allergan, which is now going to be a reverse takeover. What do you think that means for its value and its share price in the long run?
Well, I think, again, all of these mergers and takeovers are actually quite good news for shareholders in the long run, because they usually mean reductions in cost. Because again, there's lots of cost you can take out in terms of sales and distribution and marketing. You can merge a lot of stuff together and save a lot of money. And this Pfizer, again, with Allergan, will be exactly that. It will be 1 + 1 = 3, particularly in terms of lower costs. So I think for the long term, it's good for profits and therefore good for the shareholders. Again, what I really like is Shire. This is another company that Pfizer tried to take over in the UK. And that, I think, has come back from £50 to £36. That, for me, is an obvious target for another company in the future. I think we will see more of this merger and acquisition activity in the sector in years to come.
Thank you very much, Edmund.
Thank you, Bauke.
For more business news, go to our website, ibtimes.co.uk.